Looks like we're starting.
Hey, CD.
Yeah.
How's it going?
Not too bad. Sorry, I just rushed back. Yeah. Oh,
No problem.
okay.
Well, we've got a bunch of people here, so we can get started. So we're just going to go through a few frequently asked questions before we get into the stage ones. So first things first, I know that you have been releasing bits and pieces of information about proof of funds and liabilities.
Sweet.
So if you could just go into a bit more detail around this, like when would we expect a full audit of the reserves to be released? What would it include? Who might the auditor be, and so on?
Sure. Proof of reserves is a mathematical way to prove that your balance is included in a tree of balances and into the
Merkle
final
trees.
balance. And then it's using a Merkle tree
There we go.
algorithm. I actually did this in together with James Thomas in 2014. So this Merkle tree is not a new thing. It's been around for years. It basically ensures that it basically let users ensure themselves that their funds are included in a grand total, and we make sure that the total is there. Originally, we typically need a third-party auditor to be involved. Unfortunately, number one, the third-party auditor was kind of busy because everyone's trying to do proof of reserves. And secondly, the third-party auditor is one auditor that FTX used. I wouldn't name who, but there's a bit of scrutiny there. Actually, this afternoon, I was actually talking with Vitalik. Vitalik wants to come up with some type of new proof of reserves protocol. And I, of course, offered to use Binance as the guinea pig or the first test case. And he's quite excited about it. So we're connecting our teams to do that. So roughly, we'll expect probably a couple of weeks. So this is the reason why we publish all of our cold wallet addresses so that people can see our cold wallet addresses directly. It's not as good as a Merkle tree, but yeah, at least shows like, look, this is how much funds we have. And you should roughly correspond to when we do the Merkle tree proof of reserves. And it's good that other exchanges are following. And I think anything we can do to increase transparency is good. So that's kind of the rough timeline we're looking at. A couple of weeks, short answer, but that's a longer version. Yeah.
Great. And then just to take that then to the next level, Binance specifically in the lull period before that full transparency is released, how safe is Binance right now? How can the users maintain their trust, and does Binance have any current liabilities?
So Binance, we ran a very simple business. We have not taken loans from other people. We have not taken VC investments. We especially have not taken VC investments and then give the money back to the VC through a loan or a swapping or a reverse investment. And we just have never done that. We don't have loans. We don't have debt. We don't owe anybody any money. So no one, I believe in the industry, we don't owe anybody any money. No one gave us loans. We also did not give loans out of the platform. So we never take user assets and give it to a third party to manage and try to make yields, etc. We do a couple of things. We have a margin program where users' savings products are used to provide lending for the margin traders. But the margin traders cannot withdraw that money away. And our system does all the risk management. If the margin traders are out of margin, we liquidate and we do the risk management. So the funds never leave our platform. We do a bit of DeFi staking, but we only interact with a smart contract protocol, and we do that in a fairly limited basis. So we don't have funds that we give to another third-party fund manager, and we rely on them to perform well and not run away. Lastly. Many small exchanges rely on either each other or Binance for liquidity. So that means they have to make a deposit on Binance. And then, so they in their account, they will typically have millions of dollars or hundreds of millions of dollars on Binance or in another exchange to sort of share liquidity. Binance, because we're the largest liquidity pool on the planet, we don't use other smaller exchanges for liquidity. So all of the user funds, all of our funds stay on our platform. We don't use other platforms for to borrow the liquidity. So from all of those aspects, our funds stay on our platform, and we publish the address. It's transparent. Nothing's risk-free, right? So crypto exchanges are inherently quite risky businesses. You have to run them well. You have to do security well. You have to do a number of things well. But we're self-contained. We don't owe any other people other money. So we're very clean, very simple business. We also do not do futures trading ourselves. We don't have a quant trading firm. So we are not trying to make money from trading ourselves. We're not trying to be a quant shop or like a hedge fund shop. We make money through trading fees. Lastly, we do have market makers. We rely very heavily on third-party market makers that provides liquidity. There is one market maker which I'm a investor and shareholder of, and I make sure that that liquidity provider does not make profits. So we try to make it not lose money, so they just provide liquidity in the market. They're not profit-driven. So we run a very simple exchange business. Yeah.
Okay, great. And then just one final question along these lines. So, as you know, we released links to a bunch of our internal wallets for some increased transparency this week ahead of proof of reserves. And there was a report from a blockchain analytics firm that dug into the details a little bit there. And we had a question around some of the percentages of the holdings that were shown in those wallets. So what's your take on, is it too risky for Binance to be holding a big percentage of BUSD and BNB in its reserves?
No. The short answer is no. BUSD is the most fiat-backed stablecoin. It's audited by NYDFS. Well, it's not issued by Binance. It's issued by Paxos. Two very separate companies, two very separate management teams. They started way before Binance. Paxos used to be itBit. I think the Paxos founder, Rich Teal, was on a separate Twitter Space AMA yesterday. Which I joined briefly. I was actually we're actually both in Indonesia for this conference. And BUSD is the most fiat-backed stablecoin, and that's fully audited, and that's transparent. They publish their monthly holdings report, and whereas other stablecoins use a lot more corporate bonds, corporate what do you call it? Corporate bonds, corporate treasury bills. And then there are other stablecoins which are kind of a black box to the outside. They don't provide audit reports, etc. And then there are other algo stablecoins. BUSD is the simplest stablecoin. It's fiat backed. It's very transparent. It's not a large portion on our exchange. If you look at total asset value, BNB is even smaller percentage. On exchange today, in a bear market, if their assets do not include a large percentage of stable coins, that is a risky sign. Because we're in a bear market, a lot of people have converted from Bitcoin, Ethereum, BNB into stable coins. On a crypto exchange, when they release their reserves, if it doesn't contain a large stash of a decent percentage of stable coins, there's usually something missing. That's actually usually a warning sign. Not to say it's guaranteed a problem. Maybe they haven't released it yet, but that's something that people should look into. So I believe that our proportions are actually very, very healthy.
Okay, perfect. And then just two quick, slightly more positive questions before we open the floor to the rest of the community here. So, CZ, today you put out an announcement about an industry recovery fund. So perhaps you could expand on that a little bit, maybe give some insight into how that could help projects thrive or what criteria we might be using to help assess that.
Sure. So I think, given the events that transpired in the last week or so, there's there will be quite a number of good projects. They basically didn't do much wrong. They were building their products. They may have their funds on an exchange that went down, or they may be invested, etc. For various number of reasons, they may be negatively affected. But otherwise, other than the sort of a liquidity short of money in the short term, there are good projects, good products, good community, etc. Good team. We want to help those projects to survive this turmoil. So the best way to provide to help them is to help them through this liquidity crisis, basically giving them money or investments, etc. We actually think that this is a pretty good time to do it because most of these projects' valuations are much more reasonable than they were a year ago. So yeah, we this is not to be very honest. This idea didn't come from me. It come from one of our co-founders, and we said let's embrace it. And we're still figuring out the details. But we want to look at more projects. We want to, especially projects that that are in need of help. And also, after I put out that that tweet, 4 or 5 other funds actually reached out to us saying they also want to help. A few projects reach out to us as well, so we'll be going through that. So I think basically now there are a few players in the industry who still have a very healthy cash reserve. Binance is one of them, and we want to help the projects, the strong projects, the good projects that need cash to survive this crunch. And then the project that survived this difficult time is actually going to be much stronger later on. So I think as negatively as things look right now, we actually think this is a very good cleansing period, and the weak project's gone. The industry is actually much healthier, even though it's extremely painful during this period. But we want to invest in strong projects right now.
Okay, that's clear. Thanks, CZ. Okay, so just one question left before I do that. I'm going to start bringing people onto the stage. So just a reminder, please try and keep your questions as quick as possible. Just remain muted until I call on you, and then yeah, you can ask your question from there. So CZ, final question from me. What's your suggestion to the average crypto user? How should they act? How should they think in a market like this at the moment?
So I got to be very careful here, giving what to do, because everyone's situation is a little bit different. But basically, you should not invest in crypto if you're using money that you need for next week or next month. You should only be using discretionary cash that you don't need for a long time, like maybe a couple of years. And if you're doing that, if you don't know what's going on, just hold. A couple of years later, all of this will blow away. People may or may not even remember this. If you, yeah, that would be the overall overriding sort of general simple principle. If you don't,
why is he cutting in and out?
What's going on? Don't try to guess what's going to happen. Sell here, buy there. Right now, during the next little while, it's going to be highly volatile. A lot of different news may come out. Some of them will be very positive. Some of them will be very negative. It's very hard to predict. So we will go through a period of high volatility and high unpredictableness. So yeah. So unless you're very experienced, very mature, very confident, and can handle the risk, I would recommend most people just hold for this period of time. Yeah, that's pretty much it, really. Yeah.
Okay, great. So on to the community questions then. So first up, we have Anthony.
Morning, CZ. You had mentioned that Binance doesn't have any debts or any loans that have been made, but I'm just curious on this contagion effect that we're expecting. Is this going to be affecting any subsidiaries or any of the major investments that Binance has made in the most recent time?
I'm actually not too. That's a broader question. I'm actually not too sure. We haven't heard from our portfolio companies so far. We have not heard like big cries for help. I think the Binance ecosystem is much less, or BNB ecosystem is much less impacted. They're all much more closely aligned with the Binance ecosystem. So I haven't heard of anything, but we have invested in like 150 something portfolio companies. I don't know the state of all of them. I do know there will be some cascading contagion effects. There will be a few other players who either have money on FTX and a significant enough amount that it may cause them trouble. But in this type of situations, the first one to go down is usually the big one. The cascading effects become smaller and smaller. So if we look at Luna UST, that was like $40 billion, $50 billion of value that's being destroyed. The first order of cascading ones, Three Arrows, is like a $4 or $5 billion size fund. And then the third layers are the Celsius, Voyagers. They're like $500 million to $1 billion kind of, so $1 billion kind of range. So each time it cascades, it's more spread out and smaller. So and we also seen from the price that when 3 arrows happened, it was a big not 3 arrows. When Luna happened, it was a big drop. When 3 arrows happened, it was like, okay, yeah, this is a fallout effect from the other thing. So that's kind of how I view the potential contagion effects. There will be some, but I think the major impact is probably out. But don't quote me on that. I could be very wrong here, but I think that the stuff that happened at FTX is is extremely surprising to everyone. If I was writing a fiction, I couldn't imagine this stuff up, right? So I think that's really an outlier, the rest are probably just what we call collateral damage because of that. The effects should be smaller. We'll see. Yeah.
All right. Thank you, Anthony, for the question. Next up is Dana. Dana, please go ahead.
Hi. I hope you can hear me. I'm having a bit of a communication issue. I wanted to know, are you guys going to reveal the data, the amount of withdrawals happening, let's say in the following days, as a lot of people are advising people to take out money out of Binance, out of everywhere, to see that the companies are stable and sustainable? Because at the end of the day, as I know, a lot of people are trading on Binance, and we do want to hold substantial amounts on the exchanges, but our trust is a bit broken. And I wanted to know if there's going to be transparency on the amount of funds being withdrawn over, the period ahead of us.
Okay, Dana, sorry about that. It seems like we've lost CZ. Give me a second.
Oh, sorry. I was on mute. Yeah. So, sorry. Yeah. So we published our cold wallet addresses a few days ago, and there's many third-party platforms that track those addresses and transfers on those addresses very carefully. I think there's been no news about significant withdrawals from those addresses in the past few days, and whereas there has been news about significant withdrawals from other exchanges who have disclosed their addresses. So I think you guys can see that on Binance, for us, it's business as usual. We do see a slight increase in withdrawals. But it's not like whenever prices drop, we see a uptick in withdrawals. That's quite normal. So for us, this is kind of very in line with price drops. We have not seen 80% withdrawals from a cold wallet or 50% funds flowing out from our platform, where it may be happening in some other smaller platforms. So for us, it's still business as usual. The addresses are fairly transparent. People are tracking it. Yeah, that's pretty much it. Yeah.
Great, nice and simple. Thank you, Dana, for the question. So I'll hand the mic over to RSA BTC.
Hello, guys. My question is regarding BUSD. CZ, can you tell us, if I have my BUSD in cold storage, and let's say hypothetical Binance.
I think it's breaking up.
Thank you.
Did you guys hear the question?
I think the question was essentially how safe is it to be holding BUSD regardless of where you have it? So if you Sorry, I think I got muted there. Did you hear that, CZ?
So if you want to hold it in BUSD regardless where, and then you got cut off.
If you want to hold it. Oh yeah, go ahead.
I just like to know, if I hold BUSD in my cold wallet, and let's say hypothetical Binance goes under, can I go to Paxos and claim my BUSD back from Paxos?
Yes, absolutely. So BUSD is issued by Paxos, and that's the place to redeem it.
Thank you.
Okay, that's nice and easy. All right, next up is Lanny. Lanny, go ahead.
Hi guys. First, I want to say thank you to CZ for all that you've been doing for the community. We truly appreciate you. I have two questions. My first question is regarding to Paxos. Are they FDIC insured? If anything happens, is there a guarantee that people can claim their money? Kind of piggyback on the question that the guy for me asked. And the second question is regarding with Trust Wallet. There's a lot of confusions out there. There's a lot of people saying Binance owns Trust Wallet and they can take your money out of it. I kind of know the answer to this, but I want you to kind of clarify for a lot of people on the call so they know what's going on, how Binance and Trust Wallet are kind of different in a way.
Okay. So on the first question, the Paxos, the insurance part, the FDIC insurance, I actually don't know the answer. I would assume that if they don't publish on their website, they probably don't have it. I actually never looked into it. What we care about much more is whether the reserves are there in a bank. Insurance is good, but my understanding is most insurance only cover up to like 250K or something, some number like that. I'm not familiar with the insurance space, and so that's kind of on that. Maybe we'll try to get the answer from Paxos somewhere. And also there has been a lot of crypto companies claiming they have insurance, but I've never seen insurance being paid out to crypto users ever in the past. Again, my information is limited. There may have been cases where I don't know about. So that's on the FDIC insurance part. On the Trust Wallet part, it is much simpler. We acquired Trust Wallet 3-4 years ago. So we do own the intellectual property rights, etc., of Trust Wallet. But Trust Wallet is an open source self-custody wallet. So you can download the source code, compile it for yourself. You can read through it. Trust Wallet holds your own private keys on your device. It's not part of Binance.com. It's not commingled. There's even Trust Wallet servers do not have access to your private keys or the seeds. And if you lose that, if you lose your wallet, if you lose your device and and lose your backup, there's no way for anybody to help you recover funds. Not Trust Wallet servers, not Trust Wallet team, not Binance.com. This is the same as any other proper self-custody wallet. So that's how Trust Wallet works. Your funds on Trust Wallet is only controlled by you. You need to keep your device secure. You need to not lose it, and that's it. Yeah.
Perfect. Okay, just before we go to the next question, for everyone listening, I know there's a lot of people here. I've been getting a few messages on the side saying that audio is cutting in and out. I think there's just a huge amount of people on the Twitter space, so it's messing up for a few people. Just want to reassure you that this one will be fully recorded, and we're going to write up all of the important answers and things as well, so there won't be a loss of information. Okay, so the next person on the mic is Crypto Palace. Or if Crypto Palace is not there, we'll pass over to Jess.
Oh, great. Sorry, I was not ready.
Yeah.
Oh, go ahead.
Yeah, thank you very much for this wonderful opportunity. Actually, the reason why I'm coming up today is just to ask CZ. Lately, I was in a space with Mario that has been on for like 48 hours, and I see most of the some people docs discussing about Binance insecurity. That there are some that Binance is actually regulated, but not following. Hello, can you hear me, please?
You're a little bit muted. Maybe you're covering your mic.
Okay, can you hear me clearly now? Can you hear me clearly?
Much better. Yeah.
Okay, good. That though Binance is regulated, but there are some things going on within the website, which I think CZ already talked about now. Okay, if at all Binance is regulated, why are some keynote security risk issue is not addressed on the website? Okay, and they're talking about some certain percentage in BUSD. Why is it such huge amount of money, such huge amount in BUSD? Why not in USDT? Okay, and why this issue is going on? I got a message across why the space is going on that a particular regulatory body is trying to sanction Binance on that particular issue. What is CZ actually doing about that, please? And I'll say there's been a controversy on the space of people them giving advice that people should move out their funds from every exchange. Now, peradventure, most of the Binance users move their fund away from Binance. What is Binance open to do? At the end of the day, will everything still be in place? Because moving the fund doesn't mean they are not attached or they are not they will not be using Binance again. But just for security purposes, for
is
the
anyone
coast to be
following
cleared,
this
probably
question?
after the coast is cleared, most of them will still come up, okay, and then start using. But if everyone has advised move their fund from Binance, what might possibly be the outcome from this, Binance? Is it please?
Okay. I didn't quite catch the second question, but I'll try to answer the first and third one first. And maybe Alex, you can help me understand the second question. I didn't quite catch it. First of all, on the USD, on the stablecoin reserves, or on the stablecoin portions in Binance, I think we answered that earlier in this chat or in this AMA. But on USDT specifically, today BUSD on Binance is like the larger portion. I forgot the number. I saw a number this afternoon. I think it was like 20 or 19% or something like that. USDT is like just slightly below that, 18% or something. So the two together contributes to quite a large, significant portion of the funds. I actually don't know what the exact number is on top of my head. But USDT is significant. And it's but BUSD is large because when users deposit USDC, TUSD, and a few other things, we convert them to BUSD. When they withdraw, we convert back and give it back to them. It's one-to-one conversion. So we have agreements. We have agreements with the issuers for all of those. So that's it's minimal risk. So as I said before, an exchange should have a healthy, especially in a bear market, they should have a significant chunk of stable coins in their wallets today. If they don't have it, that's kind of weird. So USDT, we have a pretty large chunk. I just don't have the numbers in front of me. So the third issue, if people want to withdraw their funds, they should. We are a platform. We don't block people from withdrawing their funds. It's really up to the users. If they want to withdraw it to anywhere, they can. We are here as a platform. If they want to deposit back and they want to trade on us, they can. So nothing's going to happen there. Well, when people want to withdraw their funds, they just withdraw their funds. Nothing else more is going to happen there. So it doesn't cause us any problems. To be very frank, most people who know how to hold their funds on their own and who don't trade often are probably already doing that already. So the people who are holding funds on Binance while not trading are usually the type of people who are not technical enough to hold crypto on their own securely. So even my friend Gabriel, he advised people to withdraw funds to their own wallets. I think that's a fine advice, but you have to take into consideration of how technical people are. Whether for the average person holding their crypto themselves, so they have to keep their computers secure, they have to keep your devices secure, they can't lose them. They got to have proper backup. The backups have to be encrypted and have to be stored in multiple places. And they have to have a way, ideally, if there's a significant amount of money, they should have a way to give it to their kids when they're no longer around. And how do they prevent their kids when they're still around, how do they prevent their kids from getting that? So most people are not technical enough to solve all of those problems today. People who can solve all of those problems most likely are already storing funds on themselves. It does take quite a lot more work, which is fine. So for us, we offer options. If you know how to do that, use Trust Wallet. Use another hardware wallet. That's all good. If you can't do that, asking people to withdraw funds to their phone to their own is fine. But for longer term, they have a higher chance of losing that than storing that on a centralized exchange or on a trusted centralized exchange. So there are balances. Again, we just offer options. We offer Trust Wallet as a hold your own asset wallet. We also Binance.com, the centralized exchange for you to hold on a centralized platform. we just offer options. We don't really care we don't really dictate how people should store their funds. You guys should decide for yourself. So Binance will be fine. And also, I can tell you today, if everybody withdraw their funds from the centralized exchange, we'll just shut down the centralized exchange. We have many other profitable businesses that we have. Yeah, so it's fine. Yeah.
Okay, yeah, I think that covered it all, CZ. Thanks. So we'll go back to Jess. Sorry, Jess, I think you're getting cut off there.
No, thank you. Good morning, CZ. Hope next time we talk, it's on better circumstances. But 2 questions. So you recently made a comment about exchanging moving large amounts of crypto before they demonstrate their wallet funds. Is there anything else that we should be looking out as far as a problem or red flag for other exchanges? That's my first question. And then my second question is mainly around the narrative that's being spun by mainstream media. You've been the focus of a lot of the articles, including the initial tweet saying that you were selling. Being that we have a lot of media here, what would you say about the narrative that's being pushed in MSM as far as crypto, and what do you think will change in the upcoming weeks?
Sure. Well, first of all, on the red signs or the danger signs, that's quite a lot. I probably won't be able to sort of go through all of them. But I think the most important thing is probably just use your common sense. A business has to be profitable to be sustainable. And if the business is offering high rebates, 0 fees, all of this stuff, which is fine. Binance does part of it, but Binance has a very healthy business to cover it. But if a business is not sustainable and they're just doing all this incentive to attract users, then that's probably the health of the business is probably the most important sign. So you want to use a platform that's sustainable, that's profitable, that's healthy. All this wallet transparencies, the guys who doesn't do it are probably at a high risk. The guys who do it wrong are probably at a higher risk. The guys who do it properly and no issues being reported by the community is probably good to a large extent, not guaranteed. I think the more exchanges become more transparent, the better. So I think those are the 2 top of mind. But and generally speaking, though, there are very strong network effects in the industry. The larger exchanges, like Binance, spends billions of dollars on security. A small exchange will not be able to afford that because they just don't have that level of income. So at the economy of scale plays here. Large exchange can spend that kind of resources and budget on security, compliance, etc. Whereas smaller exchanges are disadvantaged here. And not to mention liquidity, best pricing, etc. So those are just some high-level things that people look at. Of course, there's a lot of little things. I will try to be more vocal about it, but every time I'm vocal about something, people think I'm attacking some competitor, etc. So there's a balance there. Honestly, we don't view other exchanges as competitors. Their market share, their volumes are. If we take all of their volumes, we don't grow that much. Whereas if we grow the industry by 10x, we most likely will grow proportionally. So while smaller exchanges may want to get market share away from us, for us to get market share away from other smaller exchanges, it doesn't move the needle for us. So for us, we're much more focused on growing the industry instead of competing with some smaller exchange. That has never been how we work. So I want to clear that misconception. On the second point about media, that's a very frustrating, somewhat frustrating experience. But I don't think we can change it in the short term. If we look at the mainstream media, many of them either categorically says crypto is bad. Whenever there's a problem in crypto, they amplify it. When Madoff ran away with like 10 times, when Madoff was gone with 10 times more money, $53 billion or something, or I don't remember the exact number. It was just him. It was just his own problem. It wasn't the industry problem. So I think the narratives are a little bit unfair, but we're in a new industry, so people are skeptical of things. And also, even within the industry, there are exchanges who are touted as saviors of the planet, of the industry, that just went down. Whereas there's also the narrative of this large exchange got large because they do dodgy things. That's completely not true. You only get large by earning users' trust. So users today are quite smart. Social media, Twitter, information flows very quickly. So, but it is what it is. It's just something we got to deal with. But I'm very, very glad that we have Twitter. So Twitter allows us to get our voice out, and we do have a decent following on Twitter now, and on the other social media platforms as well. So social media is actually a great thing, a great tool for us to have. So I think that restores a level of balance. But more importantly, I think we over the long run, we do have to work with traditional media, the newspapers, etc. I think we need to educate them. We need to teach them how to see through the sort of just narratives. There was another article on the reserves. There was an article recently by Bloomberg saying the reserves. The first version of the article was more than 50% of the reserves on Binance are its own coins. When I read that, I was like, "What?" And then we looked. It's a paid article, which I do not subscribe to. But even in the first 3 lines, they show that most of it is in BUSD, which is not a coin that we issued. It uses the Binance brand, but it's not BNB. BNB is only 6%. The second version of the story is the reserves are 50% Binance brand is under its own brand. Okay, that's technically correct, but it's very misleading. And the way they use the wording, obviously the journalists think that our reserves are reserves, meaning that when people want to withdraw, we convert at that time for them. They didn't. If you read the article carefully, they didn't even understand that our reserves are just the same form the user store with us. So if the user just happened to store all BUSD with us, that's all we have. We don't convert. So it's not the reserve in the banking sense and the reserve in a crypto exchange sense are very different, and we just need to educate the traditional media. So I think over time this will improve, but frustratingly, short term there will be pains here and there. But I think at the same time, as a community, they've been doing this for a while. Like this situation has been there for a while. I think as a community, especially what I see on Twitter, the guys who are on Twitter are quite immune to it. We all know this is the case. So over time, and the more we act and think like that, the less incentive for the media to do that. Because every time they do that, every time they report something that's slightly off, that has a bad narrative, they lose their credibility. Over time, their influence will diminish. So it's not good for them long run. In the short term, they can create some sensation and sell a few more clicks, but longer term, that's not going to work. So that's kind of how I view media. We got to work with them, but we got to educate them. But at the end of the day, the long term right messages, accurate messages will prevail. Yeah. Sorry for that long answer.
Okay, excellent. Thank you, Jess, for both those questions. So next up is Felipe. Felipe, first I'm going to ask you a question. Is that a verified blue tick or a Twitter blue tick you've got there?
Oh, I'm a Twitter blue tick for a while before the verified even became a thing. So it's just a perk that kind of got stowed. I didn't do it for the tick. I did it just for the other features like edit.
Great. Okay, what's your question?
Yeah, my question is great. So my question is focused actually on the Binance branded exchanges. I know they're separate entities, but they do hold the Binance name. And if any one of those exchanges have issues, it does hurt Binance name as a whole. So will you be able to push those exchanges to publish their proof of liquidity and overall business health?
That's a good point. We probably could and we should. So there's a few. There's Binance Turkey. There no longer is Binance Singapore. We had to shut that down. There's a few out there. That's a good suggestion. We should ask them to do it.
Cool. Thanks, Felipe. Okay, next up is Jose.
Hello, Cecil. This is Jose from Benzinga. My question is, do you think it's possible that exchanges are sending funds to fake the proof of reserves? And would what you were discussing with Vitalik, the proof of reserve protocol, solve this issue, and how?
Well, number one, I don't know for sure what's going on in other exchanges. Binance, I can tell you that we do not do that. And I think there's been no reported suspicious activity, etc., related to us. For the other players, we can't. I don't know their books. I can't comment. I can't really be sure. But it's just not a very good thing to do. They may have a valid reason for it, or they may not. I don't really know. But it is a red flag. So just be a little bit more careful. The proof of reserve protocol, to be honest, I had a very brief discussion with Vitalik. I think he has it in his head, probably some kind of design. And he's very technical. He's very deep into this stuff. We didn't discuss in a lot of detail, but my approach would be like I would connect him with our team, and then they'll figure it out. We want to be the guinea pig for it and see how well it works. Yeah.
Great. Okay. Next up is Zelu.
Hello.
Hey, please go ahead.
Hello, CZ. I wanted to talk to you about the investment to FTX that you did and how it gave the exchange legitimacy to a lot of users like myself that went on the platform believing it was trustworthy. It doesn't seem fair for you to sell your stake and end up profiting while so many users were left with losses. And in all likelihood, it was probably the users' funds that FTX gave you in order not to raise any flags about their balance sheet. Do you feel obligated to give that money back to the FTX users?
How would you track
first of all,
all that?
I think we exited as other investors came in. So I don't know what it's not possible to say which part of the funds are which. I've not seen the transaction records, etc. We invested quite early. We exited quite early. Both events are very public. We did not hide it. We did not disclose it. I understand the sentiment. We actually also have, we had 580 million worth of FTT. We sold a small portion of it. We still hold a large bag. So I think we acted in very ethical ways. I don't want to categorically sort of say, hey, we must give the money back or not, etc. We'll try to do things to help the the FTX users. But the FTX users the FTX users choose to use FTX on their behalf, right? So the information is public. I don't want to create a situation where anything goes down in the industry, Binance have to pay for it. I don't think that's right for our users and for our people. So I want to do what's fair. I want to protect the users. We want to help the industry to grow. But I don't want to categorically commit Binance to solve every problem and be responsible for every problem, be responsible for every user loss in the industry. So I got to be fair to our users. If we do that, Binance will probably become either bankrupt pretty soon, etc. That's unfair to our users. So, and on this point, I would also say, look, as a user, you also have a responsibility. You can't just blame all the responsibility to other people. When bad things happen, if you blame all responsibility always to other people, you will never be successful. You are always looking at the most responsible person for yourself, which is yourself, right? So when this FTX issue happens, many people have a lot of different responsibilities. I think, look, does the regulator have responsibility? Yes. But do they have full responsibility? Should they compensate all the users? Probably no, because regulations doesn't prevent a bad actor from acting as a bad actor. There are punishments, there are rules, but if a bad actor just want to be a bad actor, you can't prevent it per se. In this case, I think they were lying. They lied. FTX lied. Well, I think Sam lied to his employees, his users, his shareholders, regulators all around the world, and all the users. So yes, he should take the most of the blame. But at the same time, the VC investors, including us, why did we invest them? I think that accusation was actually somewhat accurate. All the VC investors that invest in FTX made a mistake, and many of them are very professional investors. Why did they not discover this problem? Some of them are very large funds. Why did they not discover this problem? So we can look into that. But again, are they fully responsible for this problem? Should they compensate all the users? Probably no. So everybody have responsibilities here. Binance, we take our responsibilities seriously, but I don't want to categorically promise, oh, Binance is going to commit to everything, etc. So that's kind of my take. I hope that's fair.
All right. Thank you, Zelu, for the question. So moving on now to Umbrella.
Yeah, firstly, thanks, CZ, for kind of speaking your mind on Twitter. You saved me and a lot of people. Our life savings with kind of what you promoted on FTX. And I guess on that is, what are your thoughts of Twitter as a community town hall, and how do we bring more light to people like the dev who I noticed you followed on Twitter, and he kind of warned us about SBF and what FTX were doing, and kind of saved quite a few people from a retail perspective money. And then secondly, on the proof of reserves, don't you think it's more prudent actually to provide an API with live wallet addresses? And this can be integrated into the June dashboard rather than snapshots, because, it's wallets on chain. Anyone can see what those balances are. Like you provide APIs for your trading, etc. I don't see why, exchanges can't provide those APIs. DeFi protocols do it all the time.
Sure. Okay, I think those are two interesting questions. I think on the first one, I think many people try to warn their issues here and there way before things happened. There's multiple Twitter KOLs, multiple news articles, etc. But it's impossible to say conclusively there were problems. No one, without full access to FTX database, Alamada's trading records, all the contracts, etc. It would take a very strong auditor to go through all of those things to say for 100% sure this is the problem, and this is how big the problem is. I think it's going to take many months for people to figure that out, even though even with what's happened now. So while all of these KOLs, they are trying to warn users, the people may or may not trust them. And to be honest, their information may or may not be 100% correct. So you never really know. At the end of the day, you have to apply a level of judgment yourself. Yeah, I mean, even me, I didn't know they were that insolvent until Sam called me. These things we can suspect from outside, but it's kind of hard to know for sure unless you have full access to the data, all the internal workings, etc., which very few people had.
What a criminal!
I think, and also there's also a lot of people who try to spread fake information to create FUD, uncertainty, doubt, etc., in the market, just to move the price around a little bit. Maybe they hold it, maybe they just bought, or maybe they just sold. They want to influence price the other way. So it's kind of hard to tell sometimes. But look, at the end of the day, follow the KOLs you trust, and you should have a good judgment on trusting good KOLs. If you follow bad KOLs that turn out to give you wrong advice, unfollow them, or long term you will likely lose money. Lose more money than you would. But no one has conclusive information. On the second part, with an API, etc., I think that's okay. But there are different interest of there are different alignment of interest issues. For example, if Binance wants to publish our API, we would prefer to use CoinMarketCap. Would every other exchange want to do that? I'm not sure. And which central platform do we use? And we're talking about this. We're talking about exchanges globally, right? For exchanges, by providing that data in real time, they are giving value to the platform they're providing, either a commercial agreement or some kind of incentive alignment, either through shareholdings or some other way to align the commercial interest. If that model is not in place, not every exchange will collaborate with that platform. So in a decentralized ecosystem, these things have to be built organically. There's no one that says, okay, for every wallet transaction you have to report to this API, and their performance issues, right? So there are a myriad of issues. I think the first step we can do is to say, hey, why don't we lead as example and we make Binance much more transparent? Other exchanges can try to do it, and when there's a common standard, somehow emerges over. If there's a common practice, emerges over a period of time, somebody will probably try to make a platform to sort of collect all those information and make a coin market cap kind of platform to show that. There are already many data and analytics platforms in the ecosystem, but they may not be as advanced as you described. And lastly, there are privacy issues, right? So if every time that somebody creates a new withdrawal address and it's published online, etc., there could be privacy concerns. So there's a lot of different considerations. It's not as simple as, okay, we just publish all the information publicly and everyone can look at it. In an ideal world, if the human civilization is advanced enough, yes, we can make all the data completely transparent. But we bring into privacy issues today. So there are many different considerations to be considered. It's not just a simple, hey, let's publish all this data. Yes, you may solve one problem, but you may create other problems. So as an industry, we just have to explore and learn. So that's kind of what we're doing today.